So advantages of Reg A plus, you can raise up to $75 million per 12-month period. So that's a sizable amount of money. You retain control of the company, unlike when you're raising money through private equity or venture capital funding. You provide liquidity through Reg A plus to your insiders, the founders of the company, and to your long-standing investors, as well as to the new investors. You can conduct various kinds of public offerings. Reg A plus is a public offering, but you can list your company on the NASDAQ or on the NYSE, or on the OTCQB or the QX, or on a new thing, which is called the alternative trading system. And I'll explain more about those later. But that flexibility to list your company is good. And if you list on the NASDAQ or the NYSE, you have a PCAOB audit requirement once a quarter. If you list on the other exchanges I mentioned, your annual audit requirement just once a year is US GAAP. So it's a much less onerous financial reporting obligation, unless you list on the NASDAQ or on the NYSE. Already public companies can conduct secondary offerings via Reg A plus. If you choose to list on an alternative trading system, there's no shorting, and there's no naked shorting allowed on those exchanges. So that's a huge advantage. It really means that companies that are not as prepared, not ready for the rigors of being public, where naked shorting is allowed on the NASDAQ and the NYSE. When I say naked shorting, I don't mean by regular investors, I mean by stockbrokers. They're the ones that have the naked shorting ability. So on the OTC markets and on the NASDAQ and NYSE, that naked shorting risk decimates a lot of public companies. But on an alternative trading system, the ability to be liquid and yet not have the risk of short sales is a big advantage. That's an advantage of Reg A plus. You can change the valuation of your offering, as most of you will know. In many instances, you can't really change the share price and the valuation of your capital raise partway through, but in a Reg A plus you can. That's a nice thing. You could typically valid, credible companies that are succeeding raising money in Reg A plus usually will carry a higher valuation than they would have if they had raised money from venture capital or angel investment sources. So much less dilution is a big advantage. And a couple more advantages, because we're marketing these offerings online to Main Street investors, and because it turns out Main Street investors, many of them are optimists, and they're investing largely on their smartphones. It's a lot different dynamic. It's a lot more friendly dynamic, as long as we're marketing offerings that appeal to the Main Street investor. And I'll get into that later. So the ability to raise money from a less skeptical audience and to do so easily, with it being convenient for them and providing democratic access to capital for them, is a serious advantage of Reg A plus. Because in many instances, they haven't had these chances to engage and get involved with companies that they love. We've been doing Reg A plus offerings as an industry since 2015. And during COVID, one of the few advantages of COVID was that people got stuck at home and had to do other stuff than usual, and they paid attention to online investing, and this online investing category came of age as a result. So we've seen rapid growth in capital formation in the Reg A plus space, and institutional investors and accredited investors are paying much more attention, depending on the nature of the offering. I'll get into that more later also. So this is essentially, Reg A plus is essentially a simpler, less expensive form of public offering with a lot of flexibility built in. A lot of companies, it's easy, it's straightforward to include a transfer agent. Thanks, Akos. It's straightforward to include a transfer agent in Reg A plus offerings, which lightens the burden on the company of dealing with so many investors. And I can talk about that later if necessary, but the utilization of a transfer agent makes it convenient to have thousands of investors or hundreds or whatever it might be. And using broker-dealers or even underwriters is optional. I'll get into that more later also. And there's a thing called test the waters in Reg A+, where companies are allowed to test market themselves to investors without raising money. So you don't have to do an audit. You don't have to file with the SEC. You do have to conduct the test appropriately, but you are allowed to test market your company to investors to see if it's cost effective to reach them. And if so, you can, and you can also test different messages and different advertising methods to find out which description of your company resonates the best with investors. So we offer that as a service, but the point isn't that. The point is that it's nice to be able to test your offering first if you want to do that, if you want to reduce the risk of it falling on deaf ears. And the SEC has expanded that test the waters option to other kinds of offerings as well, since it's been used so successfully in Reg A+.